Right. Well, good afternoon, everyone. My name is John Mathers. I'm the chairman of the British Design Fund, and I am the ex-CEO of the Design Council. So that's maybe the connection with British Design. So I'm very pleased to invite you to this afternoon. We've got a great lineup of speakers. And in a sense, this is an opportunity to learn more about the British Design Fund. And I suppose why now is a great time to back UK products and UK product startups. Fund 2 is due to close around the end of July, so it's a very timely to have this webinar. So what I'm, just in terms of the format, what I'm going to do is ask our four speakers really, if I don't count as a speaker, but our four speakers to just give us 5 minutes on the particular areas that we've asked them to have a look at. And then what I'll do is we've got some specific topics that we're going to raise, and that's really come about from the questions that people have been asking, and we've sort of gathered those together into four sort of topic areas. So we'll have a bit of a discussion around each of those, and then it's open for the floor. So I think all of you, there is a chat box at the bottom right hand of the screen. So if you have any particular questions that you want to ask, then please do post the questions, and I will try my best to accommodate as much as I can. So I'm very pleased to be able to introduce four speakers, and I'll just introduce them all now rather than giving a break. And I'm going to be quite tough with each of them to limit to 5 minutes. So first of all, I'm going to invite Damon Bonser, who's the CEO of the British Design Fund. And Damon and I sort of co-founded the fund a couple of years ago. Tim Antos, who's the founder and chief exec of Kokoon Technology. Hi, Tim. And Tim was one of the very first beneficiaries from the fund. So it's going to be nice to be able to hear from Tim about how a new startup has managed during the lockdown. Then I'm going to introduce Chris Sandfield, and Chris is the CEO of CoInvestor. CoInvestor very much in the angel network, and the British Design Fund and CoInvestor have been working together for the last almost a year, I think it is, Chris. And then last but not least, Boyd Carson, who is the founder and CEO of Sapphire Capital. Boyd is our regulatory partner for the British Design Fund. And I think, Boyd, you're going to talk very much about, well, I'm going to let you talk. So, Damon, are you going to kick off? Yeah. 5 minutes from now.
Oh, no, I won't bore people for 5 minutes. I'll be shorter than that. Hi, everyone. I'm Damon, CEO, co-founder of the British Design Fund. For those of you that don't know, just a quick bit of background. So we launched the fund a couple of years ago in response to a funding gap that we saw in the UK, where early stage product design and manufacturing businesses simply weren't getting sufficient access or funding to and also commercial support. And it is, as John mentioned, it's kind of how me and John kind of came together on this, is that we saw this problem whilst working together on the Spark, on a program at the Design Council called Spark, which was helping sort of early stage product businesses and inventors kind of commercialize their ideas. And it became very apparent, and I was mentoring on that program, and it became very apparent there wasn't really that many places for those hardware businesses to go in the early years. So the fund, what we do is we invest cash in exchange for equity in businesses, and we also provide hands-on mentoring and expertise to help those businesses successfully launch their products into market and scale them. The team consists of myself, John Mathers, who you've already met, David Motum, former CEO of MSN International, Jonathan Silverman, founder of Silverman Schurlicker and a legal specialist from the creative sector, and David Kremer, founder of Rubik's Cube brand and Seven Towns, a big UK toy licensing business. And then I just want to say more recently, very happy to have Luke Johnson, chairman of Risk Capital Partners and former chairman of Channel 4 Television and chairman of the Gales Bakery, has joined us. We announced that a couple of weeks ago. as well as the Wilkinson Family Office, AHWL, via their Wilkinson Future Fund. So it's great to have those big names backing this fund as well. As well as the core team, we have the team of mentors who support the investees on very specific challenges. Anything ranging from kind of bootstrapping marketing, tooling the first products, etc. And then a little bit about myself. My background's in early stage product and manufacturing and launching consumer brands into market. And my particular sort of expertise and focus is around sales and marketing. So really collectively as a team, look, we know what we're doing. We know what these businesses need to know. We've been there and done it many times over. And we all passionately believe in the power of good design and the pool of, and the sort of talent pool that we have here in the UK to get those product businesses out there. Thanks.
Great.
Thanks, Damon. That's great. So, Tim, over to you.
My company Kokoon is tackling the challenge of poor sleep and relaxation. So I'm sure we've all struggled to sleep at some point in our life. It's an issue that affects over half the population, impacts kind of likelihood of cancer, Alzheimer's, many elements of your health, happiness and productivity. And at Kokoon, what we're really doing is taking established sleep science and making it much more accessible to consumers on their own terms. So we're really being a much more user-centered approach to tackling sleep and wellness. Our technology is a combination of two things. So our core platform uses data and audio working together to help people kind of relax and switch off. And that's on a number of levels. So we have personalized coaching tailored to them, their biometric data, what we're seeing, responses that they give us, and we really create this quiet space to help people disconnect from the busy, always on world around them, unwind, and then fall asleep. And the audio is intelligent, so it's responding to the individual. So as they're listening to some guidance to get themselves to sleep, that'll fade out as they fall asleep. We bring in white noise to mask their sleep and protect them. And then we kind of optimize their wake up as well. So we've been going a number of years. We've got two products, one about to launch. So we have an over-ear product, which is kind of more suited for travel and relaxation. And then we have an in-ear product, which is much more focused on the sleep side of things. Really kind of our kind of core mission is to make sleep science much more human, much more convenient. And we've been seeing a tremendous response, particularly during the COVID crisis. Actually, it's a real huge and growing challenge, sleep. And our area is really heating up a lot. I'm sure you've all heard the likes of Calm and Headspace, and kind of the bigger players such as Apple, etc., all moving in this space. And our long-term vision is really to be a platform that can integrate into products beyond our own products over time. Hopefully that's a bit of context on Kokoon that's helpful.
So can I just ask him, while we've got you on, how have you, what's happened during lockdown? Have you been working as normal? What are the challenges around that?
Yeah. So basically lockdown has been good in some ways, bad in others. So the bad, to start with the bad. So the retail channel has really dried up, and we had some really exciting contracts. So we were about to launch a Dixon's Travel. We had a chain of 20 retailers in the US that was about to launch. So obviously, from a sales perspective, it's not ideal when one of your kind of big channels goes away. But online has always been the core of our business, and that's really done quite well. It's balanced out the kind of losses that we've seen in the to the forecasts in the retail channel. I think what has been actually quite good has been, we've kind of been forced to change our way of working. So we used to kind of go to the office quite a lot, but we've actually found new efficiencies in home working. And the last 3 hires we made as a company are all actually European. So we've found that we've been able to get much better talent, really kind of because of this new way of working that we've adopted. So we're, able to look across the whole of Europe really for the talent, which has typically been very hard. So data scientists, software engineers that are very expensive in London, etc. We've been able to kind of really bring them and loop them in. So yeah, it's definitely been mixed. I think kind of one of the real positives for us has been, not positives, but one of the things for us has been just the increased awareness around the challenges with sleep, the challenges with switching off. There was a study done quite recently that during the lockdown, around 70% of the population had some issues with sleep. So it's really kind of brought to life this, and that the whole kind of mental health and wellness is really kind of comes to the fore a lot, which has been quite helpful for the business, but obviously it's not really a good thing.
So Tim, where can people buy your product?
Via our website is the preferred method. Amazon. Yeah, can you hear me right? Can you hear me right?
Yeah, sure.
Yeah. So via our website is the preferred channel.
Yeah, you're fine. You're sort of coming.
Via Amazon, and then retailers, so Selfridges, quite a few travel retailers, and some specialist kind of design retailers as well. So our big focus is through our kind of direct channel, and that's really where we've focused as a business.
Great. Thanks very much indeed, Tim. That's great. So, Chris, CoInvestor.
Yes, CoInvestor. Well, hi, good afternoon, everyone. I'm Chris Sandfield. I'm the CEO of CoInvestor. CoInvestor is essentially a platform that's been designed from the bottom up, really, to service 3 sides of the market. So we look at working with the fund managers, such as BDF, working with advisors, and increasingly working directly with the high net worths as well, really to try and create, in the first instance, market access, and in the second instance, sort of a direct digital straight-through process for managing and investing in these products, and also the single company deals that are supported by the fund managers. CoInvestor has been going for 4 years. We were originally a software business, providing this service as a subscription model to advisors. When I came into the business, it was clear that actually we need to service all 3 sides of the market at the same time. And with the technology capabilities that we had, it was quite easy for us to re-engineer that technology and then create an open marketplace. So we're a regulated platform connecting those 3 sides of the market. One of the things, just to preempt on what you were saying about the lockdown, we'd been working with custodians for about 18 months, trying to create a digital process so that the investor can come on board, they can review the market, they can invest in a fund or a single company deal. The fund manager can digitally accept that investment, and then it goes to the custodian. The custodians for 18 months had been relatively slow with regards to adopting this type of technology. What happened during lockdown is within about a week of lockdown, they'd had to close all of their post rooms. So we immediately built that digital solution for the custodians as well. So we now have a sort of true straight through digital process that goes from the advisor or the high net worth to the fund manager to the custodian, and we can then report back on that data as well. And that's a digital process. So if you create your data on the platform once, you can invest in multiple products or multiple funds. You can invite your accountant in to manage your tax certificates, or if you're an advisor, you can manage all of your clients' tax efficient investments on our platform. Again, also invite the accountants in, and we then have back office integration. So then we work with the likes of IO, where you can push that data to us, you can make the investments, and then we'll push that data back directly into your CRM systems. So what we're trying to do is just to make what historically has been a rather archaic investment process fully digital, fully transparent, and to cut out all of the paperwork and to create a digital flow for the reporting of the investments once they've been made. We currently have approximately 400, well actually over 400 wealth firms using our platform. We're seeing a sharp uptick in high net worths using our platform. We have a couple of over 2,000 now, and we're currently working with about 60 fund managers. And I guess the latest thing that we're doing is working with the likes of BDF, who are quite forward thinking. So we can build a syndicate on the platform where we can service our clients, and then anybody that's interested in working closer with BDF can simply request access to join the syndicate there, and they can get promotional marketing, and also the reporting, and also direct access to the likes of Damon and to the likes of Tim. So we're continuing to innovate. What we're seeing is the marketplace is growing, but people are starting to want to operate within the marketplace rather than outside, such as with their own portal. So that's great to see, and we're big supporters of BDF, and by us providing market access, we're increasing the liquidity flow into these types of businesses and these types of funds. So that's our goal, is to make it easier for people to invest in this stuff.
Great, thanks, Chris. I mean, it's quite interesting, isn't it? Well, why do you think this particular industry has been so recalcitrant in moving with the times and moving to the digital age? I mean, I think you're definitely amongst a small band of real pioneers in this effect. Do you see it changing much or more rapidly now that lockdown has happened and people have had to think differently?
Well, if the pioneers get shot full of arrows, John, so I'm sure everyone in the room can attest to that. I think it's been archaic because the fund managers are very good at fund managing, the investors are very good at investing, and the advisors are very good at advising. What they're not particularly good at is all working collectively together. So the processes were very disjointed, and no one really cared about the other person's pain points. So the advancements in technology have enabled us to eradicate most of those pain points. And we talk to a lot of advisors and a lot of investors who all say they will do more investing if we can take some of their heavy lifting away. And with the reporting and the tax certifications, all of this is now a digital process. So we're making it much easier. I think the new normal, such as it is, everybody's getting a lot more used to this digital environment, such as today. Normally we'd be hosting your event. I would suspect, or we'd be welcome to be hosting your event at our offices. And what we're seeing now is the acceptance of this digital way of working, the acceptance of digital signatures. Most of the fund managers now have immediately gone over to digital signatures. That was hard work for us last year, getting them to accept it. And within 6 weeks, everybody's accepting it. So, we're a regulated platform. We have two-factor authentication. Why wouldn't you accept a digital signature from the likes of us? So it's purely these archaic practices that no one seemed to want to change. But as we're bringing the market ever closer together, then everyone can see the benefits of these efficiencies, and then so everybody accepts it for the ultimate good of the investor, because we have to get this wall of money and this liquidity into the great firms like Kokoon that need it to grow. So anything we can do that supports that is great. But what I'm seeing is the three sides of the market are starting to come together and realize that, rather than just operating in their own silos. Great.
Thanks, Chris. I quite like your description of the British Design Fund as being quite forward-thinking.
Damon, I don't want Damon said it's a small screen.
Oh, great. Thanks very much indeed. Boyd, can we listen to you?
Sure. Hi, I'm Boyd Carson from Sapphire Capital, and we specialise in the I guess behind the scenes fund management of different funds. We have about 30 plus funds under management at the moment, one of which is the British Design Fund. So we would work with Damon to do all the FCA compliant angles of the fund, make sure it's all properly run and such like. And another area that we specialise in is SES and EIS, advanced assurance and compliance. So we're also very much aware of that space, so making sure all the companies are compliant from an HMRC perspective. And yeah, we've been working with Damon and the team, I think now, how long, Damon? About 4 or 5 years over the first and second funds. And yeah, we're very excited about this fund and that and all the different investments that it looks at. So yeah, that's the background to Sapphire.
Tell us a bit, Boyd, if you might, how Sapphire's been working during the lockdown and whether you've been seeing different ways of working.
Sure. So to Chris's point, we have definitely seen a move towards digital signatures and online applications, such like for all our funds on our Sapphire website, we've moved them all to online applications and digital signatures. And I think, dare I say it, COVID has given us the opportunity to sit back and think about that and actually say that's the right thing to do. It makes a lot of sense. It was something that we wanted to do much earlier on, but just given that space of time, it allowed us to actually dedicate the resources to actually doing it. Without going into too much details, there's some custodians and nominees who are probably reluctant to move in that direction, but they all will, and it makes total sense to me. It all is becoming much more seamless. The fact that an investor had to before sit down, print out and write out an application form and then scan it is a little bit crazy when you think about this day and age when it's so easy to fill up something online and digitally signature. That is just, it's so much more efficient for the investor, and it's less risk for the investment manager because they're actually getting clearly written applications. Yeah, so that's the big change that we've seen as Chris highlighted during this period.
Good. Okay, so thanks very much, gentlemen. One of the things the British Design Fund is doing is we're working with Brunel University who are very big on the sort of enterprise and entrepreneurial stage to run a sort of quantitative assessment of what makes a good entrepreneur, and what are the character traits that you would look to identify. It's still quite early days, and we put it slightly on hold whilst lockdowns are happening. But it's actually it's a hugely interesting subject because it's one of the biggest things that people have been asking us whilst we've been doing this series of webinars. What are the successful traits that make a successful? What are the traits that make up a success? Really important for a successful product startup. So I'd quite like to ask you all, and I'm going to ask you, Tim, last, because it'll be quite interesting to see what the others say and whether you agree with them or not. What do you think are the top 3 traits of a successful product startup? And Damon, it might be quite interesting to hear from you first, actually.
Okay, so so top 3. So I'd say putting the user at the heart of your business. So founders that have launched their business or designed that product with a real clear vision of what the user wants, needs, and is willing to pay for it. That's what design really means to us here at the British Design Fund. That's kind of what we've built it all upon. So that would probably be my number 1. And the benefits of that are just, from an investor's point of view, I guess you look at it and say, well, these people, they understand the user, they understand the market, they know how to communicate with that market, they kind of live and breathe it, and how to engage, and they're going to most likely be in it for the long run. All these kind of things. To be honest, if you put that user at the heart of it, we find it's that's probably top of my list. And And then I'd say, we're in the hardware space, the manufacturing space. We know it's a hugely underfunded sector, certainly for the early stage, and a lot of that is down to investors being very nervous about cash flows. So I'd say my number two successful character trait of a founder is their plan, giving an indication that they know how to scale without killing their cash flow. So the sort of things we're looking out for there. Well, I suppose maybe if I start with the red flag that we'd see would be, an investee whose kind of use of funds is largely to sort of build up stock holding. That would make us very nervous and would indicate it's probably not the approach of a founder that we'd be fully supportive of. And what we're ideally looking for is product businesses that understand you need, there's multiple channels of how you get your product through to market. Those different channels have different, they have different cash requirements, different margin requirements. But we want to see that mixture of channels, because, if you've got, like with Tim's business, you've got your direct to consumer stuff. That's great. That's undoubtedly be your highest margin channel, but it's going to need a bit of cash, because you're most likely going to need to put some stock in a warehouse, have a bit more speculative stock. But then, like Tim did very successfully, you can build up your pre-orders, run Kickstarter campaigns, and so there's again, these are the sort of things we look for. But then also kind of looking at how you're going to scale up internationally. And
okay. Your third one.
Sorry, yeah, and my third one.
Third one, Damon.
Yeah. Third one is margin. So margin is the lifeblood. So really understanding those different margin requirements for each of those different channels. And I guess one thing we look at is to say, look, you don't need to have in year one or day one, you don't need to have your margin where you want it to end up, but as long as you've got a plan that over the first couple of years, as volumes pick up, as different channels activate, that your margin gets to the point that you want it to be, that makes the business attractive. But yeah, seeing that they understand that.
Okay, great. All right, Boyd, you're in a very privileged position that you get to see an awful lot of people and an awful lot of startups. What's your thoughts?
Well, when you asked this question, I wrote down three things, being demand for what you're building. So there's no point coming up with something that if there's no actual demand for it. So you need to research properly that there is a existing demand for what you're trying to launch. Secondly, the second and third ones I came up with was cash and focus. I don't know which one is the more important one. Probably cash. You cannot run out of cash. No matter what you do, you just can't run out of cash, because it's the death of the business completely. And thirdly, focus. You can't serve two masters. If you're doing a startup, or any type of company that is, even established ones, it is so incredibly time consuming that if you're trying to do something else on the side, say you're working part-time or another job or another startup or another business of any description, that lack of focus can be very damaging to what you're trying to achieve. So the cash and the focus go hand in hand. You have to have enough cash to survive the period of the startup to be able to focus on what you're doing. That'll be it.
Great. Chris, have you got some thoughts? Anything to add to that?
Yeah, I've actually got a bit of form in this area, which, John, you may not be familiar with. So in 2010, I launched a global asset allocation firm where we raised $1.5 million to launch an asset allocation strategy to service the buy side, and that was in the eye of the financial services sort of storm and meltdown and the fallout of the liquidity crunch. And so it's interesting. I've got a slight different take on it, but or not a different take. I think to add actually to Damon and Boyd, I immediately wrote down three things. One of them is passion, because you have to be completely passionate about the service or the product that you're providing, and you have to really understand it and understand the marketplace. But if you're not really passionate about it, then I don't think it'll evolve fast enough once you get launched to develop into what it ultimately needs to be. And I think that the second point I immediately wrote down was strategy, because strategy is incredibly important. It normally doesn't last particularly long after launch, so you have to be open-minded enough to be able to evolve that strategy as you go through the cycle of launching a product. And the last thing I wrote was endurance. Really, because when you're setting up a business, you have absolutely no idea how much hard work it is. It's like having children. You know, you wouldn't have them. You wouldn't do this if you knew how much hard work it's going to be. So I think passion, strategy, and endurance would be 3 words I'd add.
Great. Okay. Children do give you a bit of joy at times, occasionally.
and so does launching a product occasionally.
So Tim, are you passionate, focused, adaptable, and in it for the long term?
Yeah. So I kind of I split this in. I've got 2 answers for this. So I've got personal qualities for the entrepreneur, and then business qualities. Because I kind of separate the 2 of them. So I think my biggest one on the personal thing, and this is just something that I've seen. You know, I've now been part of the kind of startup ecosystem for kind of 6 years or so, and you know, I've got hundreds of fellow founders from the big to the small, and I think the biggest success criteria that I've seen, and those that have got there, is really resilience and determination. So you know, what we do invariably is very hard, and you know, there's always stuff that's going to kind of knock people back. You know, it's an emotional roller coaster. It really takes some kind of digging deep to get through, and you just do what it takes. And you know, the ones that I've seen that have gotten there and have kind of, you know, have exited and gotten out the back, have really, you know, had to endure some incredible things on those journeys. So that would be my number one. My second one is really listening. So you know, there's so many people that have done this before you often, and you know, you may be doing something completely new, but even if you're doing something completely new, probably 90% of what has been done, of what you're actually doing in the whole big picture, has been done before. So really listening, and kind of it's kind of like intelligent listening, because you know, just personally, I have loads of advisors and kind of loads of perspectives from investors, from customers, from all across the thing, and just being able to kind of take that and process that and actually engage with it, and kind of, you know, I'd say listening is really key. And then I think focus and just making it happen, getting it done, and kind of knowing, you know, when to kind of really drill down and get something absolutely perfect, and when you just need to get it done and out. So yeah, I'd say focus is the great one. So that's kind of the personal qualities. And then on the business side, I think people is vital. You know, the difference between, you know, getting someone really great, particularly in an area like design, and kind of products. You know, there's this Steve Jobs thing that I always go back to on the kind of, you know, the impact of a great taxi driver versus the impact of a great product designer. The impact of a great product designer is a factor of 1,000, whereas a great taxi ride, you know, it's 10% or whatever. So yeah, really finding those incredible people, I'd say is kind of my number one. The other is I think margins and quality of revenue and commercial soundness. You know, I think kind of the more I go into this, you know, the more everything stacks up when you've got that equation really right. And then just a real focus on the user, and you know, not and really engaging with them all of the time, not just at the start, not just at the mid, but through everything you do, and keeping that dialogue going. So sorry, I've given you 6 things, but they're kind of somewhat separate.
I think because I know your story quite well, Tim. I think one of the other things is that idea that, because when you came up with Kokoon and have worked so hard on it, it's because of some of your personal experience as well, isn't it? So that,
Yeah,
I found actually.
Yeah. I think that that's a really good point, because I think fundamentally you have to be solving a real problem and, you know, a real challenge. And you know, I think that you can get by, you can make a business on something that's just incremental. But you know, I think, yeah, really kind of having a real purpose gives you so much kind of halo effect, which is really good.
Yeah, great. Okay, thanks very much indeed, guys. I'm going to jump to the third topic actually now, which is about, and a lot of people have been asking this, it's very much sort of initially, Chris, I think in your area, just a really understanding of how angel investor behavior has changed over recent years. And actually, how do you see that changing in the next few years? And, you know, some of that's to do with lockdown, but actually a lot of it's to do with the changes that are generally happening in the marketplace anyway. Chris?
Yeah, well, I mean, I think first and foremost, what I've seen is much better quality opportunities coming on. So, you know, the market access is improving, and I'm not just speaking about our platform. I think in general, market access to opportunities is improving greatly. And, you know, what I've seen through the journey, certainly within the tax efficient investment space, is, you know, the opportunities for high net worths to invest into incredible products, and then work with their advisor, so their advisors can have a holistic overview of what it is the high net worth is actually doing, or the investor is doing. Before, you know, the advisors would be taking quite a strong lead in many instances, because it was just seen as a tax efficient solution for high net worths. And, you know, what I'm seeing is a lot more active participation now from the angels themselves. They get a lot more interested in the company. They want more information. They want to get involved and use their own experiences. You know, I think with BDF, you know, a lot of your investors have come from that field directly themselves, and, you know, we're hopefully providing more market access, so advisory firms and wealth management firms can also access your service, your product. But, you know, what I'm seeing, and I think it's a really good thing, is that more active participation or more active interest with angel investors about what they're spending their money on and how it's actually being spent. You know, if our service can do one thing for that, is it increases all the efficiency. So high net worths can invest in more products historically, or more opportunities than they could have done before, because of all of that admin burden or all the stuff they don't like doing associated with investing is now being taken away and managed for them. That enables you to increase your portfolio. That enables you to diversify your portfolio. It enables you to manage it all in one place. But hopefully that gives better opportunity as well to other companies within BDF's portfolio. And, you know, if we can help provide market access, so the angels can get more, so they can uncover more opportunities that they're interested in, then that's great for everyone, because that's what we're seeing from the angels, is the, you know, more active participation.
And do you think that's going to continue, Chris?
Yes, I think lockdowns created some efficiencies. We're covering a lot more ground than we used to. You know, everybody's doing Zoom now, so that means we can cover a lot more much quicker, and that goes for everybody else. I think, you know, the one thing that we lose is sort of some of the creative spark goes out of what we're doing in lockdown. But, you know, that's the same for everyone. But, you know, my business is, as I tell my team, we're ultimately a bunch of creative problem solvers, and some of that creativity is harder, but it does enable angels to have more access and to cover more stuff and to look at more interesting opportunities, to meet more founders. You know, so yeah, I think that, you know, that's an efficiency, and that efficiencies, when they're created, they tend to carry on. So I think that behavior will be with us for forever, I think, in some degree. So, you know, if angels can look at more stuff and get more access to more interesting opportunities, then that's a great thing, and I think it will continue. Yeah.
Great, thank you. So, Boyd, did you realize you were a creative problem solver?
Certainly did not, no. Am I? No, I completely endorse what, there's very little to add to what Chris was saying there, except that what I've noticed is that there are more angels in the marketplace looking for opportunities. Whether that's a reflection that there is wealthier people around, which I don't think so. I think it's more a case of there's less opportunities in other sectors to invest. And what I mean by that is, if you put your money in the bank, you don't get anything in return. It's just zero. And a lot of the other type of investment vehicles, except for investments in the stock exchange, so to speak, have all been closed. You know, the government has, in one shape or form, taken them away. So there's only so much space for, you know, for any angel wanting to invest. It's really in this type of, either in stocks and shares or in venture capital of some description, of which EIS is a perfect example of it. So I have seen the number of people interested in this type of venture capital, dare I say it, high risk investing, increasing. That would be my observation of the last few years, which is a good thing, because every portfolio should have some element of venture capital risk investment in it.
Yeah. Okay, that's great. Damon, have you got any perspective on the shift you've, I mean, this is a relatively new market for you, I know, because I think we set the fund up, I think it was about just under 4 years ago. And we've sort of got to understand the angel investor market quite well in the last 3 or 4 years. What's your sort of perspective as a relative newcomer to this?
Yeah, I guess all I can say is what we hear from our investors. You know, I think there's been such an emphasis on tech, and you know, we're not kind of, you know, we didn't set this up. We're not like anti-technology, and like, you know, Tim's a good example. There's a huge amount of tech in that in Tim's business, but there obviously has been a huge emphasis on software sort of only businesses, and a lot of the funds kind of taking a bit of a sort of spray and pray approach, and not necessarily so much coaching and mentoring, not so much curating, you know, and I think, you know, we've kind of come along, and our approach is, you know, we've been described, we didn't know this was a term, we've been described time and time again as operator led, and I think our investors really like that, because we've been there, we've done it before, and the kind of businesses that we work with, you can grasp the basic proposition, because they're user driven ones. You don't need to have a sort of science degree to understand what the problem is that they're addressing. So and I think, you know, the investors say to us, look, we like this, you know, we're not going to, you know, jettison all our sort of software only investments. They're fine, but this is we're able to now get access to companies that give their portfolio a bit of a diversification that they know will scale in a different way, but they can fundamentally understand they are a different risk profile, and they take comfort in the sort of hands-on approach that we've got. So that would be my view. But like you said, I've not been in it probably long enough to see the trends changing too much.
Okay. Thanks very much, Damon. So I'm just going to the last sort of broad topic that we've been had a lot of questions about is the whole area of the differentiation between SES and EIS. And maybe, Boyd, you could lead on this. And just in a sense, what are the factors that an investor should be considering when choosing between the two different options, and the pros and cons of each?
Okay, the SES and EIS are fundamentally similar in what they're trying to achieve. So the main differential would be the tax relief that you would receive via picking one over the other. And that difference relates to the income tax relief. For SEIS, it's 50% income tax relief, and for EIS, it's 30% income tax relief. There's another small difference regarding capital gains tax, but I'll not get into that. But the main difference is income tax relief, 50% for SES and 30% for EIS. It's the same broadly the same reliefs for the other areas, particularly there's no capital gains tax on exit. So that they're very similar type of schemes. I always view SES as kind of the baby version of EIS. The other one area to point out is that an investor under SEIS can only invest £100,000 under SES for any 1 year tax year, and it's £1 million for EIS for any tax year. So there's a difference in the amount you can invest. But broadly speaking, they are very, very similar, except for those points. But SEIS, because it's 50% tax relief, it denotes that you are, dare I say, probably taking a higher risk on your investment, because you are investing in a company that would qualify for SES has to be less than 2 years trading. So by default, that is typically a startup company, and therefore you should, as with all these type of investments, regard it as high risk. But any new company is probably the highest risk of them all. So that's why it is 50%, because the government wants to encourage you to take that risk and reward you accordingly. So I guess another way of looking at it, apart from the tax reliefs you're going to get, is if you're investing through SEIS, you are, dare I say it, taking potentially a higher risk than investing through EIS, only because EIS is normally later stage companies. Okay. That's how I would probably differentiate between the two.
Great. Chris, what's your perspective on how people's attitudes to EIS versus SEIS have changed recently?
Yeah, well, as Boyd mentioned, the SEIS, you get 50% relief. That is for good reason. At startup, it is a high risk exercise, because the business has yet to get sort of past POC, proof of concept stage typically. I think what I'm saying is, I'll answer that question slightly differently. Is what I'm saying is, investors are investing in what they're passionate about or what they're excited about, rather than whether it's 50% or 30%. So what I'm saying is that tax is becoming less relevant. Ultimately you don't invest money to lose money. So you should invest in the business that you're interested in, or you're passionate about, or something about the sector, or your advisor knows something about the business, or the CEO of the company or the fund. So what I'm seeing is it's mattering less with what type, whether it's SEIS or EIS. It's mattering more on the business itself. And I think that's a good thing. The tax is becoming less relevant, and it should be.
Good. Okay, great. So we've got 10 minutes left. I'm going to move to some of the sort of question areas that have been coming through from the floor. So first one, and a couple of people have talked about this broadly, is when Damon talked, there's a lot of focus on the British Design Fund supporting things like the go-to-market sales approach, marketing efforts. What about some of the areas perhaps that Boyd was talking about the need to be clear on reporting, to have strong business nous, logistics, things of that ilk. So some of the maybe less sexy areas, but equally more really important areas. Damon.
Yeah, so look, and my passion is sales and marketing. It's kind of typically where I get involved with the businesses, but some of our other co-founders, so David Motum in particular, kind of will head up getting all of the reporting, the MI in place for those businesses, because as much as some of the team are talking to the investee kind of every week, every 2 weeks on particular challenges, every month there is a board meeting. So we need the MI packs to come across, and typically the founders, that they don't wake up in the morning and the thing that excites them the most is pulling together a P&L and understanding how stock sits on that. So we do a lot of support around that. I'd say most of the businesses, I mean, Tim, I'll let you answer about how we support you. I know with yours was a slightly different profile of business, I guess, because you already had a lot of support in around the sort of reporting because of some of the money you'd taken on. But yeah, for us, we typically will get involved, making sure they can do the monthly reporting, make sure they understand they can do their cash flow reports. We'll put these models in there for them and work with their accountants. Often we find their accountants kind of, need to work with us a little bit and understand our requirements. We like to see live P&Ls. We don't necessarily want to see it adjusted every month. So yeah, little things like that.
Great. Okay. Just to say it, Damon, I think there are actually people in the world who do wake up and are excited about doing a P&L that day.
Most of them don't start product businesses there.
The other thing is people have been asking about is what's the expected exit route for a British design fund investor? Boyd, do you have some perspectives on that?
Exit route as into how the investee company would exit?
Sure.
Okay. Well, typically it would happen either through some sort of trade sale or refinancing of the company itself. And, obviously you have to be aware it would take time. Then the company has to establish itself. So either the company, after a period of time, would get bought over and the shares get sold out and the money gets returned back to investors. Or you could have a situation whereby the company gets to a stage where it can refinance itself, for example, take on borrowings and buy out some of the existing shareholders. Those are the two. I could mention the company goes to some sort of listing and that's how, but does happen, but it's much, much more rare.
Okay. Tim, have you had any thoughts about where you might be in the future?
Yeah, I mean, we're doing a lot of planning for this. We've had lots of quite exciting discussions. I think kind of for us, it's just about, it's just going to be about the kind of timing. We don't yet think we've gotten our full potential. There's a lot of great stuff, really out there that we've got, can demonstrate, etc. But yeah, in order to plan, it's part of our strategy is planning for the exit and stuff. So we have exit prospects that we have seed conversations with, and we know what they're looking for, and it's something in the back of our mind when we're kind of working on where we're protecting the business, etc.
Okay. So last subject then is, I have to say I chair the British Design Fund, but I also chair the investment committee that we use to choose the companies we're going to invest in. And I have to say it is one of the best aspects and the most exciting aspects of working on the fund, because it's actually great seeing people passionate about what they're doing coming in and talking to us about it. It's a bit like Dragon's Den, but the difference is that we don't ask such daft questions and we don't have piles of money sitting on our chairs. But Damon, what's tell us a little bit more about the investment decision-making process, and what are the sort of factors that we take on board when we're looking at that? And Boyd, I'm going to ask you a bit more about maybe some of the more regulatory aspects of the decision-making process, so that as a sort of adjunct to what Damon's going to say.
Okay, I'll keep it brief because I appreciate I could probably talk all day about this stuff. So for us, I guess if I start with where the deal flow comes from, that's through our own networks, through our partnerships with places like the Royal College of Art, Design Council, places like that. But effectively, those inquiries, they come into me, and I'm the first point that fields them. So the things I'm looking out for there, the stuff we've talked about, is there a user focus? Do I think it's got scale? Can we actually add some value to it? So I'm the kind of first hurdle for them to get over. If I think that it's worth the committee seeing it, then I'll invite them to fill in a one-page application form, and that gets sent out remotely to our board. And that's the second hurdle. And all we're looking for there is a board to vote in a majority, that we then invite that company through to pitch. And then the pitches traditionally have been done face-to-face. Let's see, might be a bit more Zoom coming up. But typically then those companies come in, they'll pitch, and the thing, and in between the board kind of, approving the shortlist off the back of the one pager, I will then get quite involved with those businesses to make sure they're in the best shape. You know, so sometimes we might wait 9 months, 12 months till we actually get them to come in, because they might, you know, I might just know that they're not quite at the right, they've not quite got enough traction, or their sales forecast, their planning needs a bit more work. So I'll get quite involved with them. And then for that reason, I don't sit on the committee because I'm kind of biased.
You've
So
got one more minute, Damon. Damon, one more minute.
Yeah, and then they pitch, and the things that we really look at, you know, by the time they come through to pitch, you know, I'm fairly comfortable that they tick a lot of our boxes. So it comes down to the person, to be fair, and that's what the committee is looking for, and how we can help. Do they listen to us? You know, what the advice we give whilst they're pitching, you know, do we get the sense that they are, you know, they are listening? And then obviously that, you know, if the committee are happy, then it moves over to Sapphire's side of things, and we work with Sapphire to get all the DD done, and there's lots of going back and forth there, because there's usually...
Okay, Damon, thank you very much. Boyd.
Okay, so obviously we work very closely with Damon in this process, but we would be more orientated towards, dare I say, traditional due diligence, in that we would be checking the background of the entrepreneurs, the directors behind the company. We would be doing, making sure there's nothing untoward there. We would also be checking other areas, such as, you know, is the IP properly protected? Is all the different intangibles protected? We would go down an entire list and make sure everything's covered off. We would ask about projections and how they're put together, and we would look at the balance sheet and see how that's put together. We would ask about cash. So we're really doing a thorough due diligence process between Damon and myself, and that might include reaching out to the company to get specific questions answered. In many senses, we are working with Damon to identify the right type of company that fits the profile of the British Design Fund, but it then has to tick the compliance box, so to speak, that the people are genuine people and they don't have any skeletons in the cupboard, so to speak. And it obviously goes without saying, we would also check the EIS compliance or SEIS compliance to make sure that does exist, and secondly, that it's still valid and up to date. And that would be our process. So we're working with Damon, and then if that's all okay, it's good to go. Good.
Excellent. Well, look, thank you very much indeed, gentlemen. So thank you to Boyd, Tim, Chris and Damon. Hope you have found a useful and interesting discussion. We've covered quite a lot of ground. Just last thing to stress is that the fund, or the second fund that we're launching, is open until the end of July. So if you're interested, there's still an opportunity to invest. And please do speak to either Damon, me, Boyd, probably the best people to speak to, I think. Happy investing, and thank you very much for joining us. Thank you very much indeed.
Thanks, John.
Bye-bye. Thank you. Bye-bye.